If you're new to trading, then here are a few basic yet essential chart reading skills that you can use to identify key reversal zones using price action trading. Alright, so price action trading basically refers to how a market behaves during an uptrend or a downtrend or during consolidation phases. Alright, so during an uptrend, for those that do not know just yet, you'll see price obviously making moves to the upside, kind of stair-stepping its way to the upside. Now, technically, traders will refer to an uptrend making high highs, high lows, higher highs, higher lows, and so forth. All right, during a downtrend, the opposite would be true. Price would be making lower lows, lower highs, lower lows, lower highs, and lower lows. And typically when you'll find a reversal or potentially a correction that might actually retrace a deeper portion of, let's say, a bearish move or a bearish trend, that typically occurs when price would then, let's say, bounce higher and it actually breaks above, in this case, a lower high. In this case, lower lows, lower highs. This we typically refer to as a break of market structure, typically leading to either a deeper correction to the upside, retracing a decent portion of that downtrend. Obviously, the opposite would be true for a bullish trend, or the start of a new trend to the upside could potentially be underway. Alright, so now just using those basic principles of high highs, higher lows, or low lows, lower highs during up and down trends, we can then use that information to try and find key reversal zones which can potentially offer you really good entry opportunities or trade locations where you potentially want to trade. Alright, so in this example, it is on the ES, the E-mini S&P, set to a 60-minute time frame. It could be set on any chart, so forget for the moment that we're actually looking at a 60-minute time frame, but just focus on the actual price action. First off, I want to be talking about reversals. Now let's say from around this point over here, we could see that the ES start making lower lows, lower highs, lower lows, lower highs, and so forth, until it came to an actual point where it made a low and then start moving back to the upside. And it was around about this area over here that price actually broke above a lower high. And that could have been the first indication that a trend or the downtrend, previous downtrend potentially ended and that a new uptrend has started, or in this case you wouldn't have known that because this is after the fact I'm showing you this, but that a potential higher correction might be underway, which could offer decent trading opportunities if you're trading on a smaller time frame, for example. Alright, so what traders would typically do is then use either chart patterns. In this case, if you look really closely, let me just delete that quickly, to this price action over here, we have what is called an inverse head and shoulders pattern, which is a pattern you could follow, and a reversal pattern that typically occurs at lows or highs. Alright, so you could either use that pattern to further, gain confidence that the actual reversal is underway, but by just reading the simple chart structure break that we had over here, that signified that a trend was potentially underway. Alright, so price makes a high and actually breaks this previous market structure, pulls back a little bit, and then starts making higher highs, higher lows, higher highs, and higher lows back to the upside again. Now, what traders will typically do during a trend is wait for price to break, in this case an uptrend, a higher high, signifying a trend continuation. If you look closely at these two little highs that we've seen over there, we had a pullback right into that again, and that could have signified a potential reversal zone or area where you could go long. Now, rather than just going long, traders will then incorporate different indicators, for example, maybe volume, or look at reversal candlestick patterns to further gain confidence that an actual reversal has occurred from that area over there. This is obviously just an example. All right, so if we look at a prominent high, for example, that occurred around about this area. Again, this could have just been corrective, but it did last for a few weeks. We had high highs, high lows, high highs, high lows during an uptrend, and then price made its way downwards and it broke a previous price structure or market structure. All right, in this case, a higher low, signifying that at around this area over here, that a change in trend from an uptrend to a downtrend was potentially underway. Now, there was a lot of messy sideways movement to the side here before price actually broke down to the downside again. But this is also a very important concept. As soon as price, for example, broke that area over here, it did mess around a little bit for a while. But if you look at where it broke, it sort of created an area where it continuously found support, 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 and then finally at a stage later, price broke below there, and this is what we call support turning into potential resistance. Again, an area where, or zone, that could then potentially act at the later stage as a reversal zone. In this case, you see price pulled back into that area, tested the previous area support, turned into resistance, and a change in trend finally occurred. So these are just a few ways that you can basically spot reversals when a trend might be occurring, or sorry, change in trend might be occurring by looking at previous price structure breaks. Right, now, if you were to look at trend continuation type trades, rather than actually waiting for reversals, because during very strong trends, you might not actually get strong reversals, right? So for trend continuation type trade, you want to see price break out of, let's say, a ranging sort of condition or consolidation and making new highs after a corrective phase. In this case, we could probably assume that this was a corrective phase over here. But as soon as price broke above that area, round about here, you can see that it pulled back right into where these previous highs turned, that acted as resistance. After price broke it, it acted as support once, twice, and then we had a continuation back to the upside. So these are just two basic ways to spot key reversal zones, either after a break of previous market structure, signifying that a change in trend might have occurred, or during an actual continuation type trade. And these zones will typically act as support or resistance and offer the ideal trade locations to potentially take a trade. If you like this video and you want to find out more about price action trading or explore some of our more advanced trading strategies, then consider joining our Ninjacators Fast Track program by clicking the link below the description.